Well, hello there, Maverick traders. This is Imri taking care of today's currency recap. And what a day it has been. Currency traders, you've been asking for volatility, and the currency gods have delivered. We have volatility in spades right now, thanks to a shock policy shift from the Bank of Japan. So the Bank of Japan did not actually adjust interest rates. The Bank of Japan is stating that they're not shifting monetary policy in any way, shape, or form. But what they did do, objectively speaking, was adjust a core tenet of that bank's monetary policy around keeping conditions very dovish, particularly in terms of the target they set for their bond yields. As a result of that shift, we've seen shocks spread throughout international markets. Yields in a number of different economies have jumped, including the UK's gilts, and then of course in the US as well. So all of that is causing some absolute carnage in the currency markets. So we're going to be talking about the yen, but that's going to come a little bit later. First off, we have US equity markets, which had a fairly flat day. They were down roughly 40 points in overnight trading. We recovered quite a bit. We were up roughly 40 points, and we've pulled back somewhere in the middle. I don't have too much to say about the S&P right now. I think today's close is, it's very indecisive, as you can see by the doji candle on the chart. So we'll have to see. I wouldn't be surprised if we jump up and test that 50-period moving average a little bit higher right now. That's the orange moving average on the price chart. But we could also just trade broadly sideways before breaking down once again. If I take a look at the total world stock index, we've found support, at least for now, on the 50-period moving average. I would be surprised to see that support hold, however, over the next several sessions. We'll have to see what the trading into the new year is going to bring. But my feeling is that any sense of relief that global equity markets might have, as tenuous as that might be right now, is eventually going to give way. And I do expect to see some more downside here. And in the cryptos, we had a big day in cryptos, but still looks like a fairly ominous chart pattern to me. I wouldn't be surprised if we start breaking down once again. I still don't see any real lasting relief for crypto investors in this current market cycle, at least not yet. So we're sticking with a -2 market outlook. And in terms of news events, on Friday, we've got some Canadian GDP numbers coming out. And in the US, we have some more inflationary data coming out. And then Wednesday, we've got inflationary data coming out of Canada and a consumer confidence report in the US. Okay, so in terms of currency analysis, like I said, big day on in the various cryptocurrencies. Ethereum is the outperformer amongst this crowd, but there isn't really too much to separate them. Does that mean, I think we have a green light to buy cryptos? No, but on a very short-term basis, if the chart pattern is right, there might be an opportunity to play the long side depending on how the price action plays out over the next couple of days. If we see a continued rally in risk assets, then crypto should benefit as well. It's the fiat side that is incredibly interesting right now. So that yen number is obviously off. My apologies for that. But we've had a clearly surging yen today. I have not seen this move in the yen in a very long time. And we had the commodity currencies in the Aussie and the Kiwi be the standout losers today. But really, when we look at velocity, it's kind of the yen against the world at the moment. And we're going to take a look at the yen basket in just a moment to see exactly how that shakes out. So as we take a look at some possible trades, I want to draw your attention to a few interesting things here. So we're going to start off with the yen basket. Now, I've been talking about this falling wedge for quite some time and how falling wedges are reversal patterns. I'll be making a video on how to trade wedge patterns in the very near future, so keep an eye out for that. But as you can see, we have busted out of that wedge with a vengeance. Now, why is breaking out of this falling wedge so exciting? Well, it's because there are two very high probability targets for falling wedges. The first will be the tip of the wedge right here. Okay, so in the basket, that's several percentage points higher. We're looking at almost another 3.5% move higher, but it's likely we're going to get a pullback before that. So even in the fairly short to intermediate term, I think buying the yen on pullbacks is going to be a fairly good trade, most likely. Now here's the other exciting thing. The second target for falling wedges is that prices tend to return back to where the wedge actually started, which in this case was the high from December 2021. Okay, so from current price levels in the basket, that's almost a 12% move. So that's why I'm very excited by the strength the yen is showing. So if you missed the yen trade today, don't feel bad about it, because we are going to get a substantial pullback, most likely than not. And there will be, if this chart pattern plays out the way that historically the wedges tend to play out, then there's going to be plenty of other opportunities to ride this wave higher. Okay, now similar pattern in the dollar, but it's not yet complete. We have a falling wedge here. And if I'm taking a look at some of my favorite momentum indicators, I like this bullish cross in the MACD. That doesn't mean that prices can't continue to fall. We might get another new low in this wedge, but the momentum indicators are telling me that the dollar is starting to reach some significantly oversold conditions. A lot of today's bearishness in the dollar basket can of course be attributed to the yen. And I just want to take a look at the euro basket. So we've pretty much reached this next resistance band, and the rejection of that band is pretty telling. So I think we're going to trade back in here, and I wouldn't be surprised to see the euro consolidate back within the support zone for a little bit longer. Swiss franc has reached, it looks like it's putting in that double top and starting to roll over. A lot of bearish divergences forming here that we have to keep an eye out for. So again, I'm not crazy about shorting the Swissy here. I think there are better candidates in the Aussie dollar, potentially a Kiwi dollar, but something to keep an eye out. Regardless, the Swiss franc tends to be a little bit lower vol than the Aussie or Kiwi. So if you are looking at some cross plays and you're looking for something a little bit more lower volatility, pairing up, for example, the Japanese yen against the Swiss franc might be the way to go, if that's the kind of trader you are. The Aussies almost reached support. I still think we have a little bit further to go before we test the support. I'm not convinced we're going to break through support very easily, but let's at least see whether we test it or not. So I think in the interim, right, I'll be looking to buy the yen on pullbacks and sell the Aussie dollar on rallies. And I'll be neutral on the US dollar until we get a clear breakout of its own falling wedge. Okay, so in conclusion, we have had a really big move in the yen. The key is to be patient right now. I'm sure that a lot of you guys are feeling the FOMO, the fear of missing out. Fight it. If you give in to the FOMO, bad things happen. That's where I see traders get into hot water more often than not. So be patient. Patience pays. Avoid selling into a hole or trying to buy the bottom. Let the market digest this big move. That is my game plan. I'm going to wait now. I'm going to wait for the market to digest this move and give me a trend continuation pattern. And if I don't get a trend continuation pattern, so be it. There will always be another trade. All right, so take it from me. I used to be an incredibly aggressive trader. I try to get in at the very start of these moves. And as you mature, as you develop more experience in the markets, you learn that patience pays. All right, folks, that's it from me. If I don't speak to you again before the holidays are over, please have a very happy holiday season. Have a very happy new year. And I look forward to seeing all of you quite soon. Bye for now.